Welcome to the Legacy Radio Network. This is the Everything Financial Radio Show. We are here every week at this time. I'm your host, Dennis Tubbergen, and sure are glad you're with me today. You know, we've got a great show lined up for you today. We have Professor Laurence Kotlikoff. Professor Kotlikoff served as a member of the Economic Advisory Council under President Reagan. He has served as a consultant to the International Monetary Fund, as well as probably more world banks around the world, or central banks around the world, I should say, than probably that he has not, as well as many major corporations, PhD in economics from Harvard, and current professor at Boston University. So very excited to have Professor Kotlikoff with us. His new book, The Clash of Generations, outlines really, what is the fiscal gap of the United States and how might it affect you and your money? By fiscal gap, I mean Social Security, Medicare, all the promises that the government has made to its citizens. Can they pay? And if not, what will be the likely outcome? Also, the central banks around the world have been printing money en masse, and yet a report this week said that the money supply is actually declining. How can that be? We're going to explore that and talk about what it might mean for our economic future. We also talk about the economy and what it means for you and your money at our discovery groups. If you have not attended a discovery group at any point in the last 3 months, you are cordially invited to attend one. You can go to personallegacyseminars.com. That is personallegacyseminars.com and get more information. We'll be at the AMG Business Center in Norton Shores, just south of Muskegon this week on Tuesday, June the 12th. There are a few seats that remain for that event. You can go get more information online or register at personallegacyseminars.com. At the Discovery Group, we will talk about why we believe the current economic winter season in which we find ourselves was entirely predictable, what lies ahead, and what it might mean for you and your family. We'll also explain why we believe much of the economic growth of the past 30 years has been an illusion and what the consequences will be for you and your money. Very, very informative meeting. Again, get reservations or get more information by going to personallegacyseminars.com. That is personallegacyseminars.com. I am pleased to have back on the Everything Financial Radio Show today Professor Laurence J. Kotlikoff. Laurence Kotlikoff is a professor at Boston University. To say that his resume is impressive would certainly be an understatement. Let me give you a bit about his background. Professor Kotlikoff is a frequent columnist for Bloomberg and Forbes. He's a blogger for The Economist and The Huffington Post. Professor Kotlikoff received his BA in economics from the University of Pennsylvania in 1973 and his PhD in economics from Harvard University in 1977. He is the author or co-author of 15 books, the most recent being The Clash of Generations. We'll talk with him a bit about that. Professor Kotlikoff has served as a consultant to the International Monetary Fund, the World Bank, the Swedish Ministry of Finance, the Norwegian Ministry of Finance, the Bank of Italy, the Bank of Japan, the Bank of England, the governments of Russia and the Ukraine, also Bolivia, Bulgaria, many other agencies and many U.S. corporations that are really too numerous to mention here. He's provided expert testimony on numerous occasions to the committees of Congress, including the Senate Finance Committee and the House Ways and Means Committee, to name a couple. And, Professor, great to have you back on the show today.
Thanks so much, Dennis.
Professor, in your book, The Clash of Generations, and I just pulling this from the book, you state that the United States is bankrupt, flat broke. Thanks to accounting that would make Enron blush, America's insolvency goes far beyond what our leaders are disclosing. The United States is a fiscal basket case in worse shape than the notoriously bailed out countries of Greece, Ireland, and others. Those are strong words. Can you explain for the listeners, in terms of dollars and cents, just how broke the United States is?
Well, if you put together all the projected future taxes, which are the assets of the government, and then you compare those with the liabilities, which are the official debt, and then the commitments to pay Social Security benefits, defense spending, Medicare, Medicaid, you name it, all the non-interest, non-debt related expenditures and all these things are projected by the Congressional Budget Office. So you kind of form a present value of the assets, the taxes, and the value today and the present of these liabilities, the official ones plus the unofficial ones. The liabilities exceed the assets by $211 trillion. That's our fiscal gap. That's the true measure of our indebtedness. The underlying numbers are coming from the Congressional Budget Office, not from me. So our own government is saying that we have a credit card bill as a government. Our government has a credit card bill of $211 trillion. To pay that off, we'd have to raise taxes immediately and permanently by 64%. So every single tax that we're facing, estate and gift, corporate taxes, personal taxes, payroll taxes, they'd all have to rise immediately today by 64% and stay 64% higher for the rest of time. That's how broke this country is.
Professor, big headlines again recently as to the state of the economy. The economy is sputtering, to say the least. To what extent, in your opinion, are the current state of the economy and the fiscal condition of the United States related?
Well, I think they're very related because people, even though they haven't been given a straight story about our fiscal condition, they've kind of learned it here and there. They understand that the baby boomers are 78 million in size. They realize that they're going to be paid a huge amount of money. They don't know that it's going to be $40,000 per head on average in today's dollars, which is going to be 85% of per capita GDP. So they have a sense that the country's broke. They see the country running huge deficits even before the baby boomers start retiring. So they're nervous because they know that the government doesn't have the wherewithal to pay back this borrowing, and it hasn't stimulated the economy. It's not like spending more money has magically transformed the economy towards more output and more taxes. And they also realize that you can't spend your way out of this, and you can't cut taxes either. Cutting taxes is just as ridiculous as increasing spending when you're broke. So they're worried that the government doesn't know what it's doing, which it doesn't, and that things are going to get worse. And so they're being very cautious about spending, which is putting a damper on the economy. So we have like a vicious circle of economic death here is the way I've described it.
Professor, you bring up taxes, and the so-called Bush tax cuts are set to expire at year's end. Many analysts have stated that allowing these tax cuts to expire would be extremely detrimental to the economy, some using the term fiscal cliff to describe what lies ahead of us. What's your view as to the correct policy here?
We need to have a set of policies. If the listeners go to www.thepurpleplans.org, these are a set of policies that I've devised, which are based on my conversations with economists. A number of these policies have been endorsed by Nobel laureates. This is the set of policies that we need to fix the country going forward. It's getting our health care spending under control, but still giving everybody a basic health care plan. It's a tax reform. It's a Social Security reform. It's a reform of banking and energy policy. So we need to have a game plan to fix our fiscal and financial institutions in a very simple way that will work for the economy through time and get rid of this fiscal gap, which these plans do. That's what's needed to restore confidence. Now, people realize they have to pay more taxes and that the government can't spend as much through time, and that's what these policies require. That's going to get them to believe again in the country and to be willing to spend money. And it's not just current spending that we need. We need to have companies take all the cash they're sitting on and invest, but they're not going to invest if they don't know that there's going to be, or not confident that there's going to be customers out there in the future. So part of what we need to do is to get our fiscal house in order so that people can be confident about the country again. We've got a very deep hole, but The other thing is we have a coordination failure. Employers today are not hiring because they think other employers aren't hiring, and that's what we economists call a bad equilibrium. Were I president, I would bring together the top 1,000 employers and say, look, I want you guys to voluntarily increase your employment by 5%. Everybody go forth. I'm not going to force you to do this. I'm not going to cut your taxes or bribe you by direct spending to do this. I want you to do this for your own sake, because if you do it collectively, you're going to, guess what? You're going to all show up with, end up with more customers, because the people that other people hire will be your customer, and vice versa. So coordinating mass hiring by large employers and then going to medium-sized employers and getting them to do the same thing, that can turn the employment situation around and get us out of this very bad coordination failure that we're facing. It's something the government hasn't tried. It doesn't cost the government a penny. It's something that the president needs to try, whether it's this president or Mitt Romney.
Professor Kotlikoff, we will pick up our conversation with you on the other side of these words. Everybody stay with us. We'll be back right after these words.